this morning, 9:30, when markets opened, we were looking at Nifty mid-cap 100 at 40,129 points. So, great news there for this rally to have finally hit a ceiling. It's a sort of, mental threshold that you set for indices. Like, for example, for Nifty 50, 20,000 is the next level everybody's expecting Nifty 50 to breach, and sensex to touch 66, 67,000 levels. But I think the mid-cap rally and the small-cap rally both have been on for a sustained period of time. And finally, that mental threshold of 40,000 points has been broken this morning. So good news coming from the broader markets.
All right, good news coming in from the broader markets at this point in time. In fact, Nifty is up almost 19,600 last I checked. So good news coming in there as well, as far as the 19,600 levels is concerned. Breached that threshold for Nifty. But let's move on to stocks specifically, and also big headlines that we continue to track here. Quickly on metal and steel stocks that have done well, JSW is in the news.
That's right. So I think the the kind of buying action we saw in metals yesterday could have been on the back of Tata Steel looking at making that investment in UK, and that would have led to stocks rallying. But this morning, when markets opened, there seemed to have been some profit booking when it comes specifically to the metal index. The metal index was down about 0.5% or so in the red this morning. But yeah, the news coming from the JSW group is particularly important and exciting. I think it's putting to rest the speculations and the source-based news that was driving the JSW stock and news triggers in the last 1 week or so. In fact, more than that, maybe, the story started about a month back when there were these first rumors of JSW wanting to pick up stake in MG Motors, and that in a way signaled the foray of JSW into the electric vehicle and the automobile industry. And
absolutely.
That news is now getting more and more cemented. In fact, last week we also heard news of JSW wanting to buy the Ford Chennai plant, which has been shut down ever since Ford exited India. So I think it's fairly clear and fairly certain now that JSW as a group wants to get into the automobile space, and within that, a narrow focus on the EV space.
And it made some organic sense as well for a company that's been in the metals business for a while, an essential component into making automobile. It made absolute sense.
From a manufacturing process, it's a very classic case of forward integration. We've seen that with Tata Group as well. Tata Steel followed by Tata Motors. So at least your part of your input cost is taken care of, and you're not really paying a premium to importing or to sort of sourcing these raw materials that go into making the automobile or the car itself. Now, specifically on the JSW part, I think JSW now with this stake purchase in MG Motors, there are chances that this final decision on the acquisition of some sort of stake should materialize by the end of 2 months or so. Around Diwali is what is expected for the JSW MG Motors deal to go through. And if that doesn't go through, newspaper stories this morning also indicate that there is a plan B for JSW. And the plan B could be actually purchasing stake in a Chinese automobile company. Now, what's not mentioned in the report, but what seems to be a calculated guess that I would like to make is that we could be talking about BYD, because BYD has been looking at Indian partners. It has faced resistance from the government of India
and continues to face resistance.
And hence selling cars which are pretty much imported in more than a semi-knocked down SKD format will not be acceptable by India. So BYD seems like a plan B for JSW right now. But yeah, JSW foraying into the automobile space, EV space, seems more of a certainty than speculation now.
And more competition, therefore, for EV makers in India with JSW now. We don't know the plans just as yet, but the acquisition likely to be completed by Diwali, which is in October this year, October or November this year. As usual, let's get in our guest, Gaurang Shah of Geojit Financial Services, joining us this morning. Gaurang, thanks very much for taking time out. We've moved a little away from markets, but markets there opening in the green. What are the broad indicators, parameters, trends that you're tracking this Tuesday morning?
Thank you, and morning to all of you all, Shweta. So we've spent almost a month in the consolidation zone of 19,200, 300 on the lower side, 19,500, 600 being the higher level and a top heavy feeling wherein you see profit booking coming in. But since last week, Friday, that was the first day of the September expiry, and the rollover numbers that we saw, continued strength yesterday and today a follow-up. We put out our market view for the week yesterday, and we had possibly given a view on the market that if we are able to take off 19,600 decisively on the Nifty spot and give a close above that, then I think a rally towards the all-time high and a new high altogether will definitely be a reality, and it will come sooner rather than later. On the other side, well, it's good to see the rally and an all-time high on the mid-cap index. Small cap has also rallied, but along with that, a word of caution that in the small cap universe, you need to be extremely careful. And I think that consolidation that we had for the entire month of August in that zone that I just mentioned is possibly supportive to take us at a little bit more elevated level from here on. But for that to happen, Shweta, I think we have to close above 19,600 decisively, and possibly then you will see a follow-up.
Hi, good morning, Gaurang. Nice to have you back on the show. We were discussing JSW just as you were joining, and now a more affirmative sort of action coming from JSW on account of a more probability of certainty around JSW getting into the automobile space and more specifically into the EV space. What does this tell us about JSW?
Well, morning to you as well, Karthik. So I think more the merrier, and the race towards possibly the government statements that we also heard that India is likely to become a large manufacturing hub as far as automobile and automobile ancillary and tire manufacturing companies along with OEMs are concerned. This will only be achievable if we have more number of players coming in. And of course, policies getting more clearer for the EV segment. It's good to see that a new entrant is wanting to come in, possibly a little bit late, but better late than never, Karthik. And my sense is that as we get more details or fine prints about this entire venture into the EV or automobile segment, I think it will be much more clearer in terms of who they want to partner with, whether it is going to be a name which is already present in India, or whether they want to sign with a Chinese counterpart. But more importantly, I think how it is going to come into India, whether it is going to be a completely knockdown kit or a semi-knockdown kit which will be assembled over here in case if it's a joint venture with an overseas partner, or whether they are really looking at a more manufacturing base being set up. I think the sooner we have clarity, it will be better. But yeah, it's good to see more number of players coming.
Gaurang, how do markets and retail investors as well as institutional investors for that matter see a diversification of this kind? JSW not traditionally known to be an auto brand, and of course for the EV sector, for the auto sector, it is good news that there is more competition by way of a new entrant, a new player coming in. But by way of how markets perceive it, we saw JSW Steel down almost 1% in early trade this morning. Why do you think there is resistance on a move like this from JSW?
Well, so I think the short-term concerns, Karthik, will always remain when there is no clarity in terms of what is going to be the blueprint, what is going to be the valuation, how much of it will JSW need to shell out in terms of a takeover, or if they get into a JV with a foreign partner. And not to forget, I think one of the best performing stocks in the entire metal universe, if I'm not mistaken, Karthik, was JSW Steel, because it had rallied to a great extent. And these kind of news always play a little bit of knee-jerk reaction on the counter from an immediate short to medium-term point of view, unless and until you have clarity about the entire deal. So it's just a knee-jerk reaction. Let me give a disclosure here, since we are talking about JSW Steel. We do have a positive call on the fundamental side on JSW Steel.
Okay. All right, staying on with auto, another stock that is in focus is that of Mahindra & Mahindra. Mahindra & Mahindra, of course, in conversation with Volkswagen to acquire some essential electric component for its EVs in India, and the stock is up today. Let's pull up that stock. Stock is up today, reacting positively to that news.
Up, in fact, second decimal points up, Shweta, 0.025 as market started their early trades this morning. I think overall the development is interesting. It further shows that Mahindra is looking at partners and not just, you know, vendors within India, but making use of the German car makers' open platform to acquire components which are critical in the EV making process. But yeah, I think market's not reacting much. It seems to be more of a vendor sort of, you know, a call being taken, and not as much something that would fundamentally alter the course when it comes to M&M's, you know, foray into EVs.
All right, so auto companies, their auto stocks continue to be in focus, but a stock that we are talking, in fact, since yesterday, Nazara Tech on the back of the fact that there is fresh investment, which seemed a little counterintuitive after all that news that is coming in the past couple of months and weeks, and that is by the way of GST collection and how it's going to hammer down prospects for a lot of you know, gaming platforms. So that investment, I don't know where it stems from, but I'm sure it stems from strong fundamentals to begin with.
So as I see it, and I think Gaurang would be able to weigh in, you know, with greater details on the sector. But as I see it, I think, you know, all of us, including us, we've also been guilty of sort of, you know, writing down or underwriting the e-gaming sort of, you know, online gaming sector completely by way of the clarification that came on GST norms. So I think there were very early obituary writers that the gaming sector, online gaming sector, is going to collapse and is never going to rise back because of this sort of, you know, 28% tax on face value. But I think what the Kamath brothers, Nitin Kamath and Nikhil Kamath, who have sort of, you know, taken that call to invest about 100 crore rupees in Nazara Tech, I think the confidence is stemming more from a future where they see more and more youngsters taking on to gaming, and the gaming industry overall ballooning into a much larger industry than what we know of it today. So I think the investment decision stems from that, and after hitting lower circuit after lower circuit, when the GST news on online gaming had marred all gaming stocks including Nazara Tech, I think last week's closing price of about 714 rupees and a 10% premium on that is the basis on which the deal between the Zerodha founders Nikhil and Nitin Kamath as well as Nazara Tech has been closed. And it seems to be perhaps, you know, a bet towards the future where there are going to be more inflow of gamers into online gaming, and therein lies the growth of Nazara Tech. But that's how I see it. I think Gaurang would be able to explain this better.
Gaurang, you know, the fact that Zerodha has invested in Nazara, I think, is a testimony to the fact that you cannot write off India's online gaming industry. What are the prospects of online gaming? How bullish are you on the online gaming stocks?
Well, Shweta, so this is not a company-specific comment because we don't have a coverage on Nazara Tech, but just to answer your question and on the sector, and it's really, you know, interesting and fascinating to see a large investor coming at 10% premium and buying a decent amount of stake in a particular gaming platform company. And if I'm not mistaken, and if my what I read and reports are right, then India is possibly the second or the third largest country in terms of online gaming. Even offline gaming, if you go to see, is really huge. We have a listed entity as far as offline gaming is also concerned. Now, coming to this online gaming, and like Karthik was mentioning, I think the GST, you know, ruling came in as a rude shock for a lot of players, and we had the reaction also on the respective counters. So first of all, I think let's hope that the government is absolutely clear in terms of what the policy is and what are the kind of taxes that will be attracted as far as online and offline gaming are concerned. Given the 35% plus young population in India with the age of somewhere, you know, below 30 and closer to 28, and the attraction of the millennials towards this kind of platform, I think it's going to be a major game changer. And I was reading a couple of other reports also. In the next possibly 3 to 5 years, Shweta, I think India could become one of the largest, you know, users in terms of online gaming. with a caveat that there should be proper rules, regulation, and whatever direct and indirect taxes which are payable by this sector to the government should be absolutely crystal clear. And there should be regulation also at the same time.
And I think add to that, Gaurang, I would also, take one step further and say that these rules also need to be cast in stone at least for a period of, let's say, 5 to 8 years, and should not be subject to change every year or so.
Meddled
Right?
with,
I mean,
right.
every GST meeting cannot have rates across the board
Absolutely.
changing. So, but yeah, I think, another stock that we missed discussing earlier when we were discussing the EV story, Gaurang, is Hero MotoCorp now investing another 550 crore rupees in pretty much its competition Ather Energy, a Bengaluru-based startup which is into e-scooters, which competes directly with Hero Electric. And we've seen how that story was sort of, derailed when it came to Hero MotoCorp or Hero Electric's own electric scooters. Now, this further investment taking up its total investment in Ather Energy to about 917 crore rupees or so. Are we seeing some consolidation in the e-scooter space now?
Well, Karthik, I hope that is true, because as we were just discussing about JSW venturing into EVs, our sense at Geojit is also that, with more players coming in, it is going to be prudent to expect mergers and acquisition, and more so consolidation within the industry. And, this consolidation would possibly drive us towards much more stronger players with the consolidation going through. So not surprising. And I think after... if I'm not mistaken, again, I stand to be corrected if I'm wrong, Karthik, I think Hero MotoCorp was one of the first companies as far as EV two-wheeler launches are concerned. And then the launch process went into a absolute cold storage, or was frozen for a long period of time. And then, of course, you had news flows also, which were negative on the group as well. So it's good to see this move. And I'm quite sure as we go forward from here on, small players, mid-sized players would possibly be targeted entities for a consolidation phase in the auto sector overall.
Okay, and talking about Ather, a startup, I don't know if it's still fair to call Paytm a startup or not.
Okay.
But let's move to the Paytm
Absolutely.
story.
The Paytm story that is coming by the way of the Soundbox, the newly launched Soundbox. We don't know the impact on stock just as yet, but let's quickly make our viewers understand what this new Soundbox is. For a very long time, I think what Indian customers were waiting for is the tap and pay through one single device. I think merchants more than customers, because they had to carry different devices. That is likely to go away with the new device that Paytm launched with much fanfare yesterday. Vijay Shekhar Sharma, talking about this great new device that is going to revolutionize business models for merchants all across the country specifically. I think it's also interesting to point out that that device will pave way for a lot of iPhone and NFC users to tap their phones and pay, a service that not many, I think, merchants offer at this point in time.
That's right, Shweta. So I think, two headlines emerging this morning. One, of course, is yesterday's Soundbox and the sort of innovation at a device level in a B2B or a sort of merchant level right now. I think the more important news that markets would be looking at would be Vijay Shekhar Sharma in an interview to Bloomberg yesterday stating that he is keen to further increase his stake in Paytm. And in 197 Communication. And in fact, just a couple of days ago, Ant Fin had diluted its stake, sold its shares back to Vijay Shekhar Sharma, reducing its holding on Paytm or 197 Communication to just under 10%, 9.9% holding. Vijay Shekhar Sharma, already the largest individual stakeholder in Paytm at about 19.42% or so, more than keen to further increase his stake. So I think that is something that markets are looking at with equal interest, if not more interest, than this great new innovation, which I think has been in the works and has been a gap area, for payments in a very long time. So on the Soundbox,
right.
Yeah, go ahead.
In fact, markets reacting positively to that.
Yeah, absolutely.
Paytm stock up at this moment about 1.4%.
Right. So not surprising. So I think, this tap and pay model has been prevalent in the West for a very long time. Even in India, on cards, you have NFC and there are smaller limits available for you to tap and pay. And of course, you can adjust that using your net banking. But I think more importantly, this all-in-one device where you get to choose and you get to tap either your card or scan the QR code, or like you mentioned, NFC enabled on your iPhone, where you just tap your phone and walk. And if it is available on the iPhone, I think good chances it's also going to be available on the iWatch, like we've seen in the US and in UK, where you're just checking out, you just tap your watch and you walk out. So I think a great piece of innovation coming for India there. Not original literally, but I think yeah, the scanning the QR code enabled along with tap and pay is India's sort of innovation given our penetration of UPI. But Gaurang, let's understand from you, 197 Communication, Vijay Shekhar Sharma wanting to further increase his stake and this new sound box all-in-one device being launched. How do you see the 197 Communication story panning out?
Well, on the lighter note, Karthik, I hope earning money was equally easy like tap and earn, which is not the case. But
you know, Gaurang, I've been growing money plants. I've been growing money plants in my house all my life, hoping that at some point the leaves would change into the green back, but hasn't happened yet.
All the best with that, Karthik.
Yeah, so tap and easy can lighten your wallet. But at the same time, I think aspirations is something that will drive innovations, Karthik. And the more our aspirations grow, I think more innovations will fall through. And I have absolutely no doubt in terms of innovative ideas that our country can deliver, because we have the capability, capacity, and the experience along with us. Firstly, a disclosure: Paytm is something that we have a buy coverage on, but it is it's trading very close to our target price. So if you want to make a fresh investment, I think buy on dips would be a better strategy. And yeah, I think this is just the beginning. Possibly as we go forward into the future, you will have many more innovations come out with the kind of aspirations that all of us have.
So at this moment, Gaurang, is it fair to state that 197 Communication is primarily a fintech company? It's not a super app, it's not an online shopping company, it is not particularly, you know, a food delivery aggregator economy sort of a company. Is it fair to now singularly in one line state that Paytm or 197 Communication is primarily a fintech company? And put a rest to all other assumptions.
A fintech and an interface kind of a provider company. But let me say a word of caution, Karthik. We all have heard about the Jio Financial Services and even their aspirations in terms of where they want to go to, and with the kind of technology, with the kind of database and the kind of parent company that they have. I think companies like Paytm, I'm not talking about immediate, I'm talking about a distant future, as in when Jio Financial Services plans to possibly, spread their geographical presence, not only in terms of territories, but also in terms of products and offerings and the interfaces. So this could be one of the challenges that Paytm could face. But yeah, I think it's going to be, it's an interface platform provided company, which enables, making payments easy.
All right, let's shift focus to another stock that we are tracking, and that is a pharma major, Cipla. We don't know who's going to acquire Cipla, whether it's going to be Dr. Reddy's lab, whether it's going to be Torrent Pharma, Bain, along with Dr. Reddy's lab. No clarity there on the acquisition of Cipla just as yet.
And interestingly, Shweta, add to that, Cipla making 100% acquisition of Actor Pharma in South Africa. Actor Pharma or Actor something, I'm forgetting what it is, of a South African company at a time when there are talks about a promoter stake being acquired in the parent Cipla company itself. So I think, yeah, interesting times for the pharma sector. We haven't seen too much M&A happening when it comes to large brands, listed companies in the pharma space, and also at a time when the Indian pharma industry is being looked at with some degree of suspicion when it comes to our cough syrups or our eye drops that we export internationally. But I think Cipla, case in point, of course, a lot of bids have already been submitted by Torrent Pharma, and now we understand that even Dr. Reddy's as well as Bain Capital are in the fray to make a promoter's bid acquisition in Cipla. So I really don't know how to read the pharma story right now. If you can pull up the stocks and get Gaurang Gaurang also in. It's interesting to note that that Dr. Reddy's was in fact in the red in early trade this morning, while Torrent Pharma was up about 1.5% or so, and Cipla's shares also up in the morning, up about 0.56% or so. So let's look at Cipla, Dr. Reddy's, Torrent Pharma, all the stocks in action this morning, and also take Gaurang's view on that. Gaurang?
Well, so Dr. Reddy's and Bain Capital, new entrant, Torrent Pharma and Blackstone. Already we had the news, we had the reaction also on Torrent Pharma when the news flows were there. So today's reaction on Dr. Reddy's would possibly, I would possibly term it as a knee-jerk reaction on fallback of the news, though we don't have the clarity in terms of valuation. They are still thinking about as to how to better the valuation in terms of the offering compared to Torrent and Blackstone. Possibly, and I hope there is no third player jumping into the race. Once we have clarity, Karthik, I think we would be able to comment more on that. But the reaction on Dr. Reddy's this morning is purely because of the kind of news flows that are there, though we don't have clarity in terms of valuation.
What should investors, retail investors especially holding, let's say, Cipla, Dr. Reddy's and or Torrent Pharma do right now? Is it a wait and watch game, or just wait for news flow and decide accordingly, do nothing right now?
Well, Karthik, if I'm a fundamental analyst, I think you don't need to jump the gun. Okay. Let me give a disclosure over here. We do have coverage on Torrent Pharma as well as Cipla as well as Dr. Reddy's amongst the pharmaceutical names in the pharmaceutical universe. Let the dust settle down, Karthik. I think I'd put it that way. If you have only bought the stock with a view that you will benefit with the kind of news flows in terms of valuation and the offering, then you can act accordingly. But if you are a long-term investor, I think just let the dust settle down and wait out for a while.
All right. And yesterday, IRFC was in news, and so were many other railway stocks. How do you see the railway story panning out? We also have a new CEO, a first-time woman CEO of the railway board, and overall a lot of investment news coming from railways. How do you view railway stocks, especially IRFC, which was again trading, I think, a
20%
good 6 to 7%. It's 20%. It's hit upper circuit. So IRFC yesterday, hitting upper circuit yesterday, up about 7% or so, even in early trade this morning, Gaurang.
Yeah, so Karthik, let me again give a disclosure over here. Yesterday, when we put out our weekly market view, we mentioned about 4 sectors, primarily 3. You remember about 3 to 4 years back when the government opened up FDI and defense, Make in India, Made in India. Nobody expected that this would be the kind of orders that will flow in. And look at the kind of performance of the defense sector. Our view at Geojit is that railways and power generation, power transmission and distribution sector also will follow the same, and possibly these 2 sectors will not take as long as the defense stocks took to deliver in terms of run-up. Right. Our sense is that railways and power transmission, distribution and power generation will be much faster in terms of performance. And look at the kind of announcement that the government has made in terms of improving the entire picture of Indian railways, starting with your Vande Bharat trains to high-speed trains to modernization of railway stations to increasing the speed limit of express and superfast trains. Dedicated freight corridors, name it. I think there's a major transformation that the Indian Railways is going to, and all those companies which are associated with Indian Railways, whether it's a government-owned or a private company, I think they'll benefit great over a longer period of time. Unfortunately, I won't be stock specific because we hardly have any coverage, but I think these 2 sectors will also be in line with what defense sector has been.
All right, Gaurang, before we let you go, which are the other top stocks perhaps that you're tracking? Which are the sectors that you'll be tracking through the day today?
Well, I think IT, Shweta, is something that excites us. And mind you, there were a lot of mid to large size deals that were announced post the first quarter numbers this financial year. And I think IT index has also been performing. So I think you should possibly look out for some names in the mid-cap IT universe. To name maybe about 2 or 3 of them, I think LTI Mindtree would be the one. Persistent Systems would be the second one, and maybe a KPIT Tech.
All right, Gaurang, thanks very much for taking time out. Thank you for joining us here this Tuesday morning.
Thank you, Gaurang.
Thank you, Karthik.
A story that's been playing out by the way of India's and RBI's E-Rupee push a story that we did here on News 9 yesterday evening as well. In fact, a detailed story at that. The RBI governor continues to push for it. Various banks are pushing for it. Let's also get in Amit Ranjan to join us, perhaps, who will tell us in greater details what RBI has been doing. But the governor yesterday pushed for CBDC, or the central bank digital currency, saying that it is going to facilitate cross-border payments, perhaps make it seamless and easy, therefore hinting at and also urging for faster adoption.
Yeah, there is an instant settlement feature that has been introduced, and that, it seems, will make it faster and more secure when it comes to cross border payments. Additionally, they have linked UPI with these payments as well for banks. So it is a whole gamut of this digital payment thrust that the government is basically mooting. So the quotes of the RBI governor, I think so, they're up. I'll just probably read them out. I strongly believe cross-border payments can be made more efficient through adoption of CBDC, and this is an area which should receive your close attention. And then he went on to say, if we can get the second quote, notwithstanding the progress made so far, the key challenges to existing cross-border payments continue to be high cost, low speed, limited access and insufficient transparency, and all these things will be taken care of by this new thrust that of CBDC that the RBI governor has mooted.
All right, Karthik. So let's Karthik, first things first. UPI is different from E-Rupee. E-Rupee is different from cryptocurrency. A lot of people out there, we in fact urge you to go to News 9 Plus, download the documentary, watch the documentary that you can find on the app, the News 9 Plus app, and perhaps go through that documentary to better understand what E-Rupee and E-Rupee prospects are. But a lot of banks made some very exciting announcements yesterday, and they said you can scan one QR code and choose to transact either through UPI or through E-Rupee wallet. Now, the service has not been made available to every person because we don't have access to E-Rupee. I'm not sure if you do, if you're one of the select customers who's got an E-Rupee invite just as yet. But what does it really mean for digital payments and the future of digital payments?
To put it very simply, Shweta, and let's try and make it absolutely crystal clear. What is the digital rupee or the E-Rupee or the central bank digital currency? It goes by three nomenclatures: CBDC, E-Rupee, digital rupee. It is basically a digital replacement of the cash that you're carrying in your wallet. It comes in cash-like denominations, 500 rupees. So there's a 500 rupee E-Rupee note in your wallet. 200 rupees, 100 rupees, 50 rupees, 20 rupees, 10 rupees, and the coin denominations as well, right? It is primarily only and only a replacement for cash in your hand, cash in your wallet, cash that you keep at home. It is not money lying in your bank. So very simply put, instead of carrying a physical wallet, you carry the digital payments app and you transact through that digital wallet, right? Now, a very obvious question that arises is, how is it different from UPI, right? How it is different from UPI is that UPI is a bank-to-bank transfer. CBDC is a digital note, person to person, my digital note going from my wallet to your wallet.
Right.
And if I need some change back from you, you returning a digital rupee or digital denominations equivalent back to my wallet.
Right. So when I read it, what I understood is there's not going to be any intermediary as opposed to what happens with
like
UPI.
Cash, like cash.
Right.
If I owe you 500 rupees, I can take out a 500 rupee note and give it to you. Right. I am not using a bank service which is transferring money from my bank account, debiting that, crediting your bank account, and you going to an ATM and withdrawing that 500 rupee note. I immediately transfer a digital version of the 500 rupee note to you. And if the transaction is 400 rupees and I have a 500 rupee digital note, I transfer 500 rupees to you and you transfer 100 rupee back to me, just like we would do when we are exchanging a physical currency.
Right.
Right. To my mind, honestly speaking, I think there is no need for a CBDC. I think the only advantage the government has is by way of saving the printing cost, which runs up to as high as about 5,000 crore rupees per annum. But if you're in any case digitizing the economy, if you're in any case digitizing payments, UPI has seen the kind of penetration it has seen. The only use case for digital rupee, to my mind, is when you don't want to leave a trace of what you have spent on who you have transferred money to. I think that's the one and only use case, which I think is going to add more confusion, and I doubt it has a very, very direct use case for it to take off immediately, unlike the UPI, which was ease of payments.
Okay.
I think one thing more for people who find it hard to control payments. In UPI, every time you make a payment, you don't go and check your bank account how much money is left.
Okay.
In a wallet, you already know that that is the amount in your bank. So it's only from the wallet what you have is what you're spending.
Okay.
So it's just a habit.
So you're just compartmentalizing.
Yeah,
that's
so
all.
it's a habit.
But because
So
you still know what's in your bank.
But you know, Shweta,
And
my
you don't know
point
what's
is-
in your
you don't
wallet.
need to.
my point is, you
But
had
that-
wallets, digital wallets even earlier. Paytm, we were discussing Paytm
Yes,
sometime back. Paytm
absolutely.
had a digital wallet. UPI
Did-
replaced it.
and didn't take
you would
off.
load, you would load 100 rupees, 1000 rupees, 5000 rupees into that wallet and
Right.
spend with that. Any milk basket, any grocery sort of, platform that you use, any delivery platform you use, Amazon Pay for that matter, you can load up your Amazon Pay wallet and spend from that. So, it can still keep your budget under check with or without a CBDC based wallet coming into the market. But yeah, I mean, the government is bullish on it, RBI is bullish on it. I think it's a tech led platform, it is backed by blockchain, etc. It is, it's something that the government is pushing for, a lot of countries are pushing for globally as well, and not too many countries have faced any sort of success with it yet. I'm not sure if we will be able to qualify success in that domain as well, but let's see where it goes from here.
Okay, maybe cross-border payments that is where RBI governor is very bullish on.
And you have
maybe
a Swift interface already, right? You have a
That
Swift
is
interface
true.
already.
That is true. But then again, if you want to get rid of any trace, as you rightly mentioned, that's the only way you can do it. Perhaps it's going to be finding
I know,
some
but then
merit in
it's
use.
Cross-border, I don't think
counterintuitive
so
for the
that
government to push for something that is unlikely to be traced back.
Makes sense, absolutely. And strong debate there from my colleagues. We don't know whether E-Rupee push is going to result and yield in anything positive going forward. But RBI, of course, continues to be bullish. SBI stock on the back of that news, or maybe more, I don't know, was up today, this morning.
No, I don't think this would have been a trigger for SBI. Basically, SBI followed by IDBI Bank, and a lot of banks have already made those announcements. They're yet to launch. It's basically the interoperability of a QR code, right? So you scan your QR code, you either pay by UPI or you pay by any other wallet, including the CBDC. I think that's a small piece of news there. I don't think the stock is moving on this.
I've never seen Karthik being more dismissive of a development. But let's shift focus now to a story that we are tracking by the way of rising prices of not just essential items but sugar too as well now. It appears, Amit, that sugar prices, you'll have to, it's going to leave a sour taste in your mouth.
It's gone up 3%.
Okay.
So in the wholesale and retail and factory prices.
Okay.
So I'll just read out what it is costing now. In where we are sitting in Delhi, it is now 40 rupees a kg, 40.5
Right.
a kg. In Mumbai, it is 37.8 a kg. In Ghaziabad, 40.1. So it's slightly cheaper in Ghaziabad than in Noida. And West Bengal, it is as much as 43 rupees a kg.
Okay.
So it has gone up 3% in this range of 40 to 45 rupees a kg now, sugar
right.
prices. And that after
government
the
is in
government
fact
had
taking
released,
measures. Yes.
they've taken measures of releasing 2 lakh tons for the last month over the 23.6 around lakh tons that was allocated. They have upped the next month's allocation, September allocation, 6% over last year to 25 lakh tons. Just to take care of these
Right.
surging demand and supply side issues that we are facing because of all sorts of things that are happening in the world, climate being one of them.
All right, and,
So-
and sticking to all sorts of things that are happening in Delhi, in India, and the buzz around, of course, continues to be on G20, the G20 summit, which we'll see head of states already on their way, en route, perhaps will be landing tomorrow or day after. Preparations are on and in full swing.
So, Shweta, a couple of dampeners, if I can call it, on the G20 Summit 2023, the much famed, talked about and prepared for event starting in Delhi 2 days from now. Now, number one, Xi Jinping has
Not
dropped
making
out.
it.
Right. Now, this, of course, is a huge political setback when it comes to geopolitics, not just for India, but also the already sort of, cold relations between the West and China, US, particularly US and China. I think another dampener is that the First Lady of the US, Jill Biden, is down with COVID. Thankfully, President Biden has so far tested negative, but I think that is also going to be something that is going to keep India on tenterhooks, for the next 2 days or so, until President Joe Biden finally arrives in Delhi for the G20 summit. So I think two dampeners there. Of course, no news there. Putin, of course, we knew earlier also is not going to travel for the G20 summit. So when it comes to global leadership of the top 20 countries in the world, we already have two confirmed dropouts, which of course come by way of Putin and Xi Jinping. Now, I think India, of course, particularly is likely to hope for certain imperative outcomes from the G20 summit. But the economy track meetings that happened yesterday in a run-up to the G20 summit, again, have some damp news. One coming by way of cryptocurrencies. We still haven't been able to draft a framework, and this is something which again has been in the works for many months now, and there was supposed to be this paper to be drafted by India with a clear framework, taking inputs from finance ministers of other G20 countries to have a clear framework for governing cryptocurrencies going forward. And while that paper in some form apparently has been made ready, it's called a synthesis paper, it does not seem to be yet something which can be held as a global standard for cryptocurrencies, right? And of course, these discussions are happening on the economy track of G20. Cut to another important economy issue is this whole debate on debt restructuring. And it would have been up for debate. I think it would have been a very heated discussion had Chinese Premier Xi Jinping traveled to India for G20. But in his absence, again, I think
in his replacement, in fact, there will be representation.
Of course, Mr. Li, right, is the replacement. But I know, I'm saying, in the absence of Xi Jinping himself arriving for the G20 summit, I think this entire debate on debt restructuring for South Asian economies and also some African economies is something which has been, hotly debated for quite some time now. The entire multilateral banks, sort of, the way they lend to these developing economies which are in dire need, and we've seen many instances of this, including not so friendly neighbors, including Pakistan, and more friendly nations, including Sri Lanka, which have received enormous amounts of debt from World Bank, IMF and these multilateral agencies. But I think what is critical also is that China has been a great lender to a lot of emerging economies and a lot of dwindling economies, if I might add, where there has been a cash crunch, there has been a BOP crisis, and China has stepped in as this sort of, big brother of the, of the Asian region and provided debt to a lot of these emerging countries which are facing economic headwinds. And these countries obviously are finding it hard because of the overall macro global environment and inflation, and the overall picture not so kind. They're finding it difficult to repay their debt, and I think G20 was to come together and arrive at a debt restructuring plan. And this restructuring plan is something that China would have definitely opposed to, simply because it has vested interest by way of recovering that interest, that loan and the interest on that loan. So in the absence of China, any sort of debt restructuring is unlikely to go through. But let's see if there is some sort of a consensus that the other G20 leaders can arrive at when it comes to this pertaining issue of debt restructuring.
All right, and we'll of course continue to bring you all the G20 updates right here on Newsline. But before we let you go, a very interesting story that is in the papers today is by the way of people who are earning, and CEOs for that matter, high-end executives who are earning 10 crore rupees and more annually is swelling up. Who are these people?
Hero Motocorp again, Mr. Jindal leads the list. His salary went up 18% to 99 point something crore.
Okay.
So he is leading the list, followed by the CEO of Wipro.
Okay.
But yeah, there are lesser number of companies that have released their figures. But of the 1,000 odd that have released it, there are 201 CEOs who are earning north of 10 crores per annum. Last year,
and these are listed companies.
Listed companies. But
so you'll have a lot of unlisted companies who are earning way higher.
Last year, it was 2,000 of the 2,700 companies who had released, there were 233 CEOs. This year, only from 1,000, there are already 201.
Okay.
And the Nifty 50 CEOs, of course, were not so lucky.
Okay.
So the big company
that is
CEOs,
surprising.
yeah, that's surprising. So if we have Mr. Anand Mahindra took a cut of almost 80%. In his salary.
Okay.
So that was, but yeah, Hero MotoCorp is leading the roost. 99 crores.
Hero MotoCorp or JSW?
JSW.
Sajjan Jindal, I think.
Sajjan Jindal, JSW.
Yeah,
sorry,
right.
sorry. So yeah,
right.
So okay, he is leading, followed by Wipro. So
all
that
right.
is,
So those, of course, we know the next job to find, if at all we get any lucky after this.
Don't go to the Nifty 50 companies.
Time to update our CVs. I wonder if there's somebody out there who's going to hire us.
Anybody watching us, you have 3 takers that you can take on board. All right, but before we close this bulletin, remember it is the birthday of second Vice President of India, Dr. Sarvepalli Radhakrishnan. We celebrate today as Teachers' Day. So all the teachers watching out there, a very, very happy Teachers' Day. And to the man who teaches me every day, Karthik Malhotra. Happy Teachers' Day.
Happy Teachers' Day to all of you and to our viewers. I think we learn every day from our viewers by way of them watching our show, commenting on those shows. So I think keep them coming. I think every time we receive feedback, it acts as a great learning ground for us as well. And we hope to keep bettering and making ourselves more valuable to our viewers.
All right. And on that note, I think it's time to close this bulletin. Thank you for watching.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink